Let's bring in an exclusive interview. Fong Li, he is the CEO of Strategy. Fong, it's great to have you back here. Welcome.
Thanks for having me again.
And describe in your words this change in strategy from never selling Bitcoin to managing the Bitcoin. What is it? Price per share?
Bitcoin per share, yeah.
OK, thank you. What is the philosophy behind this change?
Yeah, the biggest change that's happened to the company, and I would argue to Bitcoin and perhaps the financial markets in the last year, has been the advent of digital credit, which is Stretch. We've raised $8.5 billion in 10 months. And with that, we look at optionality, we look at our strategy, and we say, now let's look at the Bitcoin and see if it can provide us value from time to time to sell it. And ultimately, I believe in math over ideology. And at the point where selling Bitcoin versus selling equity to pay a dividend is better for our Bitcoin per share and for our common shareholders, we'll do it.
So Stretch is a perpetual preferred stock with an 11.5% yield that's paid monthly. So is what you're saying that you're selling some of your Bitcoin holdings in order to pay this yield?
We will sell our Bitcoin to pay the yield where it's accretive to our shareholders, and that's defined as accretive to Bitcoin per share, right? And the times when it's accretive are when the book value of our company is trading, below the price, or the price is trading below the book value, right? Or MNAV is below right now 1.22.
So that's just for Stretch in particular?
That's just for Stretch, but we'll also look at selling Bitcoin, for example, to capture tax gains, right? Defer tax gains or tax losses in this particular case also.
What about Strategy more broadly? You have $1.5 billion in terms of your outstanding dividend obligation, and you have about 18 months of dividend coverage. Is that right at current levels?
That's right. And then we also have behind that about $60 billion worth of Bitcoin to cover our dividends also.
Go ahead, Steve.
Fong, talk about the concept of liquidity with me for a second. Liquidity, some people define as the idea that I can buy or sell an asset and not affect the price. That's not true for Strategy, right? When you guys announce you're going to possibly sell Bitcoin, you're the largest corporate holder of Bitcoin, as I understand it. So do you feel like you have the liquidity for this, or the flexibility that you need for this strategy, or are you constrained by what happens when Strategy sells Bitcoin?
Bitcoin trades north of $60 billion a day, right? And if our entire annual dividend is $1.5 billion that we have to pay, right, on a daily basis, we're talking percentage points or basis points of the Bitcoin liquidity. What you saw, for example, is the last couple of weeks, we didn't buy any Bitcoin, and Bitcoin price went up. So I don't think although we're a big player of overall Bitcoin, we own almost 4%. On a daily basis, I don't think we're driving the price up or down, and we're not a big part of liquidity isn't an issue for us.
And do you believe that there's any reason to question dividend coverage either for Stretch or for core Strategy at this point?
Right now, our leverage is right around 10 to 15%. Our amplification is about 35%. Right, and if you compare that to typical companies, we would be rated just based on those KPIs as an investment grade stock. So I don't see that being an issue right now, and we manage it very closely. We look at the equity, we look at the debt, and we try to manage our leverage and amplification level very thoughtfully.
Quick question that's been floated, this idea, would you hive off the software part of the business? Is that something you thought about?
Not really. The software business is a small, I would say, non-material part of our business, about $500 million in revenue, and grew 11% in the first quarter, so it's doing well. But it's neither a distraction nor an important asset in our overall business.